Good evening, traders. Welcome to this live wave webinar where we take a look at patterns in general, of course, specifically in the Forex market and charts in general. We're going to be talking about how to translate that analysis into concrete trading ideas and also talk a little about trade management itself. So, of course, entries is one part of the story, but exiting at the right spot is very important as well. So, I'm very excited to talk about these topics. If you would like to know more about my methods, then definitely recommend my ebook. It's almost 600 pages, and you can get it for only 25 euros. So very affordable, and you can learn everything from A to Z, what I know at least about charting patterns and technical analysis. So I think that's a great resource. And if you're really a fan, then of course there's also the SWAT course that takes everything even deeper and more complex and explains everything in simple videos. It's about 70 plus videos, 22 plus hours. There are PDFs, there's strategies explained and indicators included with templates for the MetaTrader 4 and includes the ebook as well. So yeah, I think those are great follow, ways of checking out my systems and methods if you're of course interested. So let's get started. We're getting close to the end of 2020. And we have, by the way, before I start, some interesting sponsorships. So our website is fairly simple. You have 4 tabs at the top. And about, you can learn more about us. Of course, services, you can obviously choose the type of trading you're interested in, Forex options, or we have indicators and strategies here. Providers, then you'll find a tab called sponsorships. And we have a couple of new sponsorships, so that's something you want to check out. And we have, of course, obviously, analysis in our blog, education, webinars, and events. So it's fairly simple. But if you go to sponsorships, very quickly, there's a great offer that was presented to us from Monfex for anyone. There's a limitation in which countries can apply, but if you are able to open an account with them, you can get ECS Live for 6 months for free, or a great discount on 2 of these EAs, the Zeus EA and London Open Advanced EA. But if you're not from one of those countries, there are other sponsorships available too, by the way, from Key2 Markets, Milton Prime, HYCM, and Iron FX. So feel free to choose a broker that is suitable for you and that matches your interests. All right, let's move on. Thanks for your attention on that. Always good to take a look at sponsorships from our partners, of course, and there we go. So now this is already part 7 of our Elliott Wave and Fibonacci moving averages fractals series. And well, what I like about trading waves, of course, is that it's not only a method, but it's also a forecasting tool. It gives you an idea about what to expect. Now that could be a pro and a con, because if you rely too much on what to expect and you get kind of too tied to that, you might create a bias, and that could also have disadvantages. So it's good to balance those two. That's why I rely on moving averages, fibs, and fractals to actually translate the waves into trading ideas. And moving averages is one of the better tools for that because it gives you a very fast and quick understanding of what the chart is about, and also provides very concrete ideas about which trades make sense and which trades are maybe risky. So when you look at a 4-hour chart like this, obviously, when you're looking for setups, the less risky setups are when you trade away from the moving averages, because in that case, you're trading with the trend. So obviously, when here price is above the long-term moving averages, let's use the crosshair here. When you have price above the short-term moving average and that's above the long-term moving averages, then you have a alignment for the uptrend, And of course, in that case, you can see a great space and a great move up. Now, not every time will this be so strong as we have here, but obviously, this is where your choices are becoming easier when you see such opportunities. Okay. Whereas, of course, if you're trading against the trend, you need to pick the tops here to get some pips to the downside. And even then, you don't have, in some cases, price goes sideways and then continues with the trend. Of course, if you were able to pick this top, then you had a lot more space for a bigger reversal trade here. But of course, it's more difficult than trading with the trend. So obviously, step one for most traders, specifically when you're starting out, is determining what the trend is and trading with that trend. But of course, also avoiding trading with the trend at the wrong spots. If you take a long here, that would be cherry picking the top, which also would be not too good. So we want to be the best way to translate analysis into good trades, in my view at least, is choosing a spot where there's a decent trend, but it's not overextended, and going with the trend rather than putting a lot of effort into finding the reversal um, and trading the retracement. It's not impossible. It just, in my view, requires more experience, and it's easier to start out with that. Now, you want to avoid, of course, when the trend is overextended, you want to avoid trading with the trend. So here would be good to try to avoid it and wait for this retracement, of course, to happen, and then restart thinking about trading with the trend. But obviously, eventually, there's going to be a bigger reversal, and that happened, or retracement that happened here on the euro dollar, and then we got again a new trend. So in many cases, trading with this trend is a decent proposition, and of course, there's going to be plenty of times where there is no trend, or there's going to be a range, reversal, retracement. And in that case, this particular pair might not be that interesting for trend traders, and you might want to focus on other currency pairs. So, in my view, that's really one of the main factors to look at when translating analysis into trading concrete trading ideas. Is what is that bigger 4 hour trend? Now, in my case, I use 4 hour, but of course, it depends on what time frame you use yourself. If you're used to trading on a weekly chart, I mean, you wouldn't care about a 4 hour chart. If you're trading on a 5 minute chart, maybe you care a little bit, but maybe even more so about the 1 hour chart, right? So it of course depends on what type of trader you are. But whatever time frame you use for the trend, that is, I think, a very important factor in understanding the what type of trades you're interested in. Now, not every time there's going to be many moments where they're not interesting trades. So, of course, it's difficult sometimes to sit on our hands and wait for the right opportunities to arrive. But this is the second great feature or important feature, is being patient for the setups to arrive and not to chase the market or jump after it. So not to jump into trade too soon or jump into trade too late. Um, it's tempting, of course, from a psychological point of view, but that's the discipline that helps us. It's very important to help us stay on track. Um, Now, thirdly, is combining time frames. I think it's a great edge as a manual trader. Of course, if even as I guess, automated trading, you can include that too. But uh, is time frames, right? Because it gives you different perspectives, bird's eye perspective or detailed perspective, to make decisions about whether you want to trade it. So let's say, for instance, at this spot right here, we're looking for, price has made a clear move up with good momentum here. We have a pullback that bounced at the long-term moving averages. And if we put a fib from here to here, we see price respecting the 50, 61.8 fib zone. We have a higher low, we have a higher high, we have a bounce at the 144 EMA, we have a re-break above the 21 EMA zone with new blue SWAT candles indicating momentum to the upside. So at this point, We don't have a full trend alignment, but we have, the basic criteria of a trend, which is price 21 EMA above 144 and 233 EMA. So we can look for a breakout towards these fib targets, right? If the resistance trend line is broken, or maybe more importantly, this fractal is broken here. So that breakout we could trade on this time frame and looked with an entry order above. There are many ways how we can tackle this, right? So we could look for a pending order above these fractals with a stop loss maybe below the 21 EMA, or we can look at normal candle chart and look for a candle close above it, which happened here. We can look for, so that's, pending order or candle close. We can look for a break above this fractal. That's actually just the first idea. So those are basically pending order above the fractal or the top or the trend line, or wait for a candle close above those levels. We can also wait for a break pullback continuation, of course, for instance, on lower time frames. So let's do that. To mix time frames, we can do that on the hourly chart. And we can see here a break, pullback, and continuation. And we can trade that in many ways. We can take the break itself on the hourly chart. We can take the pullback at the 21 EMA zone, or wait for price action to confirm the bounce here with these bullish candles. Of course, you can use SWAT tools, for instance, the blue candles here after the gray candles or the blue arrows, the HMA flipping back up, or just simply the fractal break itself, the continuation here as well, possibility. A time pattern, this higher low, 5 to 6 candles, 5 to 7 candles after that, not breaking this low would require, be another potential entry right there. So all of these techniques I explained in the SWAT course, there are a lot of options to play around with, and combining these options on different time frames gives a lot of flexibility on tackling the entry. Okay, so step one would be, am I interested in this pair? Does it offer me some opportunity with the trend, a particular breakout? Step two is, what kind of trigger am I waiting for? When do I confirm it? And step three would be, how do I actually trade it? So in our case here, we like the break above the 21 EMA here. We were looking at this three wave up. So we had a confirmation here. We had a clear trigger with this trend line. And then the third step would be, how to trade it either in this time frame or lower time frame, the actual continuation here, showing you a couple of those examples, how you can trade to the upside. Okay, so now let's say that the price moves up, goes sideways, moves up again, right? So we're in this position, there's momentum. So when we get a momentum breakout candle, for instance, like this one, okay, let's say we already took a position here with this break, and on the 1 hour chart, perhaps we had two positions, and now we see this candle pushing through not only this trend line, but also these fractals and the 272 target. So at that moment, momentum is high, impulse has started. So we can even look at lower time frames, like a 15-minute chart, to capture, to capture that momentum continuation, basically, right? So we can play around with these time frames to understand what is the best spot. Sorry about that. Quickly trying to find that spot on the 50-minute chart. if I can. Maybe I can. Maybe it's too far ago. I don't know. Could be too far ago. This is 14th of May. I have to go back more. Okay, hang on. Apologies for that. I should use something more closer. But... Okay. Sorry for that. All right. So yeah, when we see this momentum bursting here to the upside, I suspect that it was this candle. Let's see the time. Finishing at 16. Here. At this point, we had that 4-hour candle confirmation. So, with that moment, we might consider that this is really strong momentum, pushing through, strong candle close. So that would give the opportunity on a lower time frame to look for a continuation of that momentum. And, during the Asian session, at the end of the Asian session, beginning of the next day, it would be good to look for breakouts above the highs for follow through of that momentum. Wouldn't want to expect too much because, of course, this is a lower time frame where the continuation push might be limited. But you can see still a what is it? Let's take a look here. About 48 pips continuation there above that high, and then you get a deeper pullback and still a follow through to the upside. So with these continuations, of course, you want to be a little bit more on the low time frame, a little bit more aggressive, I think, in the management of the trades. But you can see how you can play around with that momentum continuation on the 15th. So on the 4 and 1 hour chart, you'll be a little bit more on guard to take the setups as it breaks for the first time. But as it continues, there's, of course, a chance to trade part of these momentum follow throughs, even on lower time frames. So when you get the trend established and prices really continue with the trend, there's some intraday, smaller kind of scalps or intraday pushes that could be captured as price keeps steaming away from this 21 EMA. But there wouldn't be maybe as many swing trades available because, of course, the further you get away from the 21 EMA, the less space there is. So swing trades would be great in here on the 4 and 1 hour chart. Maybe even here to break of the minus 61.8 target with this candle, for instance, and this MACD dot. But after that, you would want to be careful as you get closer to these higher fib targets and not trade on this time frame anymore because it's getting too close to the targets, and a retracement back to the 144 MA is just becoming more likely, right? Which it eventually did. So you might still want to trade above the minus 100 target up to the minus 161.8 target, but on lower time frame, maybe on a 5 or 50-minute chart, right? Whereas on a 4 and 1 hour chart, there's an opportunity here as price breaks and maybe above the minus 61.8 target, of course. Those would be the two best moments, right? Or the very first leg here up to the moving averages. But on lower time frames will give you more space maybe to trade in here indeed, or up in here, or even add here, even if the space is smaller. So once you see again, as I said, if you see a consolidation zone going sideways here, that indicates that the bulls are in control at the minus 61.8 target. So you can think about, again, higher time frame trades or low and or lower time frame trades. Here, as we got this breakout candle, as I said, that's not necessarily maybe the best moment for a 4 hour chart, but still good for a 50-minute chart up to that minus 61.8 target at 111.49. So yeah, you can keep playing that 3D chess in a way, and ride this swing all the way up to the minus 61.8 target. Now, I won't repeat this exercise, but that's plenty of opportunity to catch some trades there. Then, so that's a great point for with the trend traders up to the targets. But then you get the point, of course, that the trend is extended, and this is when more experienced traders will try to find trades against the trend. If they see a lot of things in favor of a reversal retracement, the divergence, the bearish price action, here the wick, for instance, time pattern, not breaking this high X amount of times, price maybe breaking through the 21 EMA, failing to above the break the 21 EMA, second break below the 20 EMA, all of those indicate that a larger retracement is taking place. And there are ways, yes, to trade against the trend in that case when you have more experience, either on this time frame or lower time frames, to trade back to the 144 EMA. So it is more dangerous, but certainly when there's enough supporting factors available, you can do that if you have that experience to do that, to translate those trades and move them back to the 144 EMA. And yeah, at this point, it depends on the higher time frame analysis, really. Looking at how the pattern developed, like this, it looks like a falling wedge now, and the bounce at the 144 MA plus the impulse after that, and the break above the falling wedge pattern suggests maybe more upside, right? So that's where we get retracement and the continuation higher. And I won't go through this exercise again, but you can see plenty of bounces at the 144 MA, breaks above the 21 EMA, re-breaks and continuations above the 20 EMA, and there's plenty of potential trades using all kind of SWAT methods, fracked up breaks, moving average breaks, SWAT candles, HMAs, to trade to the upside on this time frame here on this time frame at the beginning, especially, when price is moving away on lower time frames to ride this wave to the upside. One good trick with trading against the trend is the HMA. It's good to have the HMA down when trading against the trend and HMA up when trading with the trend, but specifically against the trend, HMA down is good because HMA in the opposite direction. So if it's an uptrend, HMA down, because that helps really establish the fact that we're seeing at least some counter trend momentum taking place. That's not the only factor you want to keep an eye on, but it does help if that's available. Okay, so here the trend slows down, but you still see many good pushes to the upside before the trend really runs out of speed, which happens here and then collapses and a bigger retracement takes place. And then we kind of get into a range period here. But trading with the trend certainly helps spot that, and you can do that so easily with these SWAT methods to establish that. But trading against the trend is certainly not out of the question. If you get more experience, there's a lot of opportunity to trade that too. Just be more careful. It's more difficult. You got to be a little bit more on guard. It requires just a little bit more experience. So let me see if I missed anything. Yeah, well, just to add, maybe here you can see some counter trend setups, for instance, that worked out well with the red candles, of course, some working out better than others. In this area, really the ups and the downs worked out well, both the counter trend and with the trend setups. In this case, there's even not really a clear trend, to be honest, right? Although the bulls still have control because the long-term moving average is clearly below it. Certainly, there's a clear range going on. But yeah, looking for the very simple price and moving averages aligned, looking for a break to confirm the trend trade, and then looking for an entry after the decision zone has been broken is a very conservative and a very solid way of trading, right? So you got uptrend, you have break, you're looking for pullback and continuation, and that's what you got. And plenty of ways to find that continuation using SWAT candles, fractals, etc., HMA, SWAT arrows. So obviously you got the trend here. You have a trigger, and then you're looking for the entry anywhere in here on this time frame, here on this time frame, and maybe here more on lower time frames as this starts to accelerate away from those moving averages. Of course, if price has moved away a lot from these moving averages, then you want to be more careful again, because of course at that time a reversal retracement is starting to pick up some speed. At this point, when it hits Wiz 8, you want to be careful. But then if it makes a bull flag pattern, then of course there's again a higher chance that the trend will still push at least for one more higher high and continue with that potential. So it makes sense to still look for longs within that trend when price breaks that bull flag in here. Even though the trend might be a little bit extended, still makes sense because the patterns are indicating that with this bull flag pattern. Okay. So very simple, but very effective, and gives you right away an instant roadmap on what to look for and not what to look for. Right? Not once again, not to say that everything must be this perfect, but if you do find it that perfect, it's just you're kind of right away on guard that this is a good structure and this might be interesting to trade. And if you have less experience, you might want to only focus on that. If you have more experience, of course, you can try to trade more parts of the chart, the reversals, the retracements, the ranges, the overextensions, but it's just more difficult. So, of course, if you're beginning, it could be good to skip a lot of this stuff because you don't have that experience yet to really capture those trades. Just focus on the more simple stuff. All right. I guess that's it for today. We're going to continue with trade management next time around. And we show great trading. Of course, check out our website for a lot of goodies, a lot of free analysis, a lot of free indicators, but also some A-class goodies that are maybe paid, but you get more, substantial things in return for that, like my SWAT course, or then it's ECS live signals, or then it's Black Widow system, or our automated trading. If you don't have time for all of this, of course, we got automated trading as well. So check that out. Or we got a great sponsorships, of course, from, for instance, MonoFX or other brokers that might suit you. So plenty of things to review in your in your browsing of our website. A lot of goodies you can find there. So that's it for this year. We'll be back 2 weeks from now in the new 2021, excuse me. Then we'll focus specifically on trading management because I already had a couple of webinars talking about trading ideas. I don't want to be too repetitive. We'll talk about trade management specifically in the next webinar. Cheers. Bye-bye.